at Blueprint, we really don't think about factors as much as we do asset classes. Because for us, the price of the asset class will shift towards those more growth elements in the portfolio, particularly in our single stock portfolio. And as the strength of the trend increases in value, we'll simply start shifting back towards value. So we make no prediction, no forward-looking statement on whether growth is going to outperform or value is going to outperform. We let price do the talking for us and help us and tell us where to shift towards. Just like we didn't know growth would outperform in 2020, yet we started to shift there in our single stock portfolio. If value were to outperform growth in 2021, we trust that the price is simply going to move us there. So how does that happen? Well, there is a value to being agnostic. And so what we wanted to do is we wanted to take the Russell 1000 Growth Index and look at its highest weighted sector, and that's technology. Go figure. The Russell 1000 Growth has about a 44% exposure to the tech sector. Well, when you sum up all of the individual equities comprised in the tech sector in our individual stock strategy, it totals about pretty close to 38%. So when you look on the opposite end of the spectrum, value is at 9%. So what do I mean when I say the price will help us flow back or amebically flow towards one factor or another? Well, as a result of the previous chart I showed you from September to now, where value has started to outperform, that's showing up in the trend of each of these individual stocks. So here's what that looks like. We're starting to take a step, albeit a small step. It is a step in the direction towards a more value-oriented tilt. You can see here, our exposure in November is going from about 38 to about 33. And this isn't because tech stocks are weak. It's because we're seeing a reemergence in value stocks. We're simply taking this handoff process that I've talked about in terms of US to real estate this month or our alternatives to fixed income. It's the same risk handoff process that will now take these overweighted tech stocks in our portfolio and just simply hand that exposure back to more value-oriented stocks as they're beginning to recover and reestablish a rising trend. So let's flip this and now look at the largest weighting in the, or largest sector weighting in the Russell 1000 Value Index, which is financials. It's about 19% sector weighting in the Russell 1000 Value compared to the Russell 1000 Growth at about 2%. Well, Blueprint's exposure in November was 3. This is the sum total of the individual stock exposure we had for stocks in the financial sector. But now as we head into December, the reemergence of rising trends in many of these financial stocks leads us to increase our exposure by a factor of more than 2. So now we're at about 8.5%. Again, this isn't because other sectors or stocks contained in other sectors are falling. This is simply because those that fell early in the year, value stocks, by and large, financials, energy, materials, we're just simply taking that exposure that was handed off previously to tech stocks and then putting it back at a baseline, and still in many cases underweight the value stocks, but we're starting to increase exposure to them. So we see this as just an enormous value that we don't have to make a prediction, that we're not locked into, our egos don't get locked into any one factor or position, and we have no straitjacket in terms of what factor may outperform in the future. When a factor begins to outperform, we will then just simply shift more of our assets to that factor over time. And we need evidence to do that, and that is the confirmation of a rising trend, particularly as we see here in the financial sector.